Hey guys, welcome back to the channel. It's me, Adam, and you're watching Unlimited Options Investing. The market has been ripping up, and in this video, I want to take a look at the technical analysis and see if this rally is for real or if it's just a bear market rally. We're going to take a look at the biggest names in the market, as well as the major indices, the S&P 500 and the NASDAQ 100, and much, much more. Let's get started. Alrighty, so I first want to start off with the S&P 500, the SPY on the daily time frame. So we see again the bottom here back in June 17th, and we made a one lower high as well as several higher highs. So over here on the 28th of June, as well as on the 22nd of July, we pulled back, hit that 20 exponential moving average, that red line we see over here, and then we had a breakout, and then so far we've been holding on. And then fully on breaking out of that channel of the higher highs that we were making, we filled in both of these gaps that we had on the downturn back in June. It was a very tough time as the market was just plummeting down, two massive gaps in a row. And right now we're at an area that we found previous resistance at the beginning of June, support back in early May, as well as support back in March. So some key areas where we want to see the buyers and the sellers do get out. So yes, the market has done very well over the past month and a half. At the same time, we are expecting a pullback in the near distant future. So if we do pull back, we're going to want to see the buyers step up at either at the top of this channel or these moving averages or somewhere in this channel. But if we break the lower part of this channel, then that would be really, really bad. So below 375, I don't necessarily know if we're going to see that or not. But again, this entire year, who would have said what we've seen so far was going to happen? So really, anything is always on the table all the time when it comes to markets. If we take a look at the QQQ, the NASDAQ, so over here I've drawn the upward trend where we had the lower highs and the higher highs, and we have this downward trend ever since December of last year, where we touched it at the end of March, early April, and then we ripped on toward the downside. So similar to the S&P 500, we made higher lows and we made higher highs, and we're above that channel at the moment, but we're quickly approaching that downward trend. So that's going to be a very, very key area. So we're currently at 322, 323. I guess once we get to 330 is when we're really going to see the sellers potentially step up on the NASDAQ or the QQQ. And if we are to pull back, we're going to want to see some kind of buying pressure. Again, either on the top of this channel, similar to the S&P 500, or the moving averages where we see in the middle of this channel over here. But we definitely don't want to see it cross the bottom of this channel. So really anywhere below this channel is going to be for this recovery that we are seeing at the moment. But so far so good until the market tells us otherwise, and don't worry, it's going to tell you otherwise sooner or later. So relatively looking at the correlation of the QQQ to the S&P 500 of the SPY, and I love this. It looks like a breakout. It looks like it's coming out of the channel. Again, for now, we've seen it already maybe a couple of weeks ago, and it came right back into the channel, so it definitely could do that again. But a very nice clean breakout so far. And again, we're reaching an area of resistance at 0.78, where we have seen previous consolidation in the past, back in April and as well back in March earlier of this year. And taking a look at XLY relative to XLP, XLY is consumer discretionary, so looking at names like Amazon and Tesla making up the two top names of that ETF, and looking at names of XLP, the top 10 holdings, 70% is made up of Procter & Gamble, Coca-Cola, Pepsi, Walmart, Costco. So names that you know aren't going to go anywhere despite how the economy is doing. And we're seeing here we had a big gap up this past week. And for now, and just for now, until we see some kind of further confirmation, we are above this blue line, which I've drawn in the past where we had previous support. It acted as resistance around this 2.19 area. So again, let's see if it holds up for the time being. Just like the rest of the names that we're seeing, we're at some very key areas where we're going to have to see if it's able to hold up or if we're going to get faked out and have some kind of step back in correction. How intense that correction is going to be is we'll have to see how that goes. And you look at XLK to RSP, XLK being the technology information ETF, looking at big names, Apple, Microsoft, Nvidia, and this one also looking like it's breaking out. So all these charts are looking pretty similar. We're at exactly 1 when it comes to the correlation. So XLK to RSP, XLK again being that information technology, RSP being the S&P 500 equally weighted. So it just shows how technology is doing relative to the other sectors in the S&P 500, and technology has been outperforming since the end of May, and again we see that breakout of the channel. So similar to all the key resistance areas that we are on the NASDAQ and the S&P 500, and the correlation between QQQ and SPY and XLY to XLP, if this also is going to be at a key resistance area, if this is also going to show some kind of correction, at least in the short to medium term, and if we're going to go back into the channel to the moving averages, or if we're going to be able to break out from this one level. So looking at individual stocks, starting off with Apple on the daily time frame as well, this one reaching a low of about 130 just about a month and a half ago, and now going up to about 166. Right after earnings, we jumped above the 200 SMA, and we've been able to hold it again for the time being. We've seen resistance before at 165 back in May of this year, as well as in March. We've seen it plenty. We saw it even at the end of November of 2021. So we've been able to hold the 200 simple moving day average, as well as this blue line, which has acted as support plenty in the past, March of this year, as well as October of last year, and several other times in the past in 2021, even back to 2020. It was a key area, this blue line, which coincided very nicely with the 200 simple moving day average, where it is at the moment. If we take a look at AMD, this one just reported earnings a couple of days ago, and it actually went down on earnings and didn't do the greatest. I was expecting it actually to go back above 100. As we can see, a key area is about 100. The next key area being around 122, 120, and as well as we have the 200 simple moving day average at around 110. So every $10 is a very key area for AMD. And until we break 100, we're just going to be floating around in the middle of nowhere, which it seems like we are at the moment. So we can't get super excited for AMD. It's kind of in the middle of nowhere for the time being. If we take a look at Amazon, so right after earnings, we had gapped up to about the $130 range, back into that key area, which we saw support back earlier this year until we fell off a cliff during earnings of, I guess, quarter one at the time, where we were going anywhere from $130 to about $100 a share. This is after the split, of course. So this used to be a $3,000 stock once upon a time, and we're just seeing it consolidate for the time being. But if we do get some weakness in the NASDAQ or the S&P 500, we could definitely see this one go for a gap fill, maybe around 128, all the way back down, maybe to 120. And this one was making higher lows even before the earnings had come out. So I guess someone knew something before those earnings came out. So if we do get a pullback, we want to see it around the moving averages, maybe toward this blue line. If we break the blue line, then the market will be on one at that point. We take a look at Google. We've been in this channel for ever since the end of April, early May, so for a few months now. The lows of this channel being around $100, $105, and the top of this channel being around $118, $120. So for the time being, we're also toward the top of this channel. Makes sense because, again, we're approaching an area of resistance on the SPY and the NASDAQ. And what I think for Google is the only way for this to break out of this $120 channel is I would have to see the SPY and the NASDAQ also break out from those key areas of resistance, which I don't think is going to happen, and it definitely could, but I don't think it will, which is why I don't think Google will go above the $120 mark. Something's eventually going to give, either the top of the channel or the bottom of the channel. Next up, taking a look at Meta. And again, what I'm going to do with this is just go back to the monthly. We have had support, strong support ever since 2016 on this blue trend line, exactly where we are pretty much at the time being. Now, I'm not a big fan of Meta for the long term because I'm not liking what I'm seeing from their earnings. They're a big company and they're making money, but at the same time, they're not growing, and I want to invest my money where companies are growing in substantial ways, and I'm not seeing that from Meta. However, from a technical analysis standpoint, we are near that support, so potentially as a trade, this one could do well, but it's not one I would hold for the medium or long term. Next up, you take a look at Microsoft. This one is still below its 200 simple moving day average, which is kind of interesting because of Apple being above it, or just above it, not by much. You would think that Microsoft would be doing something similar, but it actually hasn't been, and actually has underperformed Apple by quite a bit. We reached highs back in November of 350 and lows about a month and a half ago of 242. And this one, for the better part, is chopping sideways. And this one, for the better part, has come out of its channel from 275 to 250. But we're currently at an area where there was a lot of previous consolidation back in May of this year, as well as February, and even going back to last year in October. This 280 level was a lot of consolidation. So again, like the rest of the market and like the rest of what we've been seeing, a very key area of resistance that we're pushing through. Next up being NVIDIA. This one has had a terrible 2022, and it is a very volatile stock. When things are great, it does amazing, and when things are bad, it does awful. This is a very steep downturn from the end of March to the bottom, to the lows over here of 140. So in March, we were at 285 and falling, pretty much slicing in half in about, 3 months? We've had a little bit of recovery like the rest of the market, but again, at a key area at 190, previous resistance, previous support, and previous support from last July and August of 2021. Last but not least, my favorite stock out there, Tesla stock. So just as volatile as Nvidia sometimes, when the highs are high, they're great, and when the lows are low, they are hard to go through. But again, where most of the market had bottomed in the middle of June at $630 for Tesla, it is now trading almost $300 more in just, 6 weeks, let's say, at $915. If we zoom in, we're looking right above that 200 simple moving day average. And the thing that's interesting with Tesla is, see this rejection candle? It makes you think like, okay, that's it. The euphoria must be over. We've got to make some kind of, pivot at this point. But if we zoom out and take a look at last year in 2021, I remember this huge run up in October and see this huge shooting star, this rejection candle. It was 2 days in a row, but yet the stock still ran up. And eventually here, again, these two is what I thought these two candles were over here, but it's unpredictable sometimes. So you go back to where we are now. We had this rejection candle. And I was thinking, okay, 200 simple moving day average, previous area of resistance. This could be most likely or possibly it, but again, no. Green candle, and now we're above that 200 simple moving day average. Let's see if we're going to find further resistance or if we're going to continue up to this downtrend, which has touched once, twice, and 3 times. So that's the end of the video. Thank you very much for watching. Let me know in the comments below, do you think it's a bear market rally, or is this rally for real and we're going to continue rebounding, crushing those overhead resistances? Let me know in the comments below. As always, subscribe, like, and check out my description for links to my Instagram, my Twitter, and my TikTok. I will see you guys in my next video.